What's going on, guys? Welcome to another video. Welcome to the Ticker Feed channel and welcome to the family. So today what we're going to be talking about is GEVO. It's one of my favorite stocks, so I really do enjoy talking about it. And so what we're going to be talking about specifically today is going to be factors likely to influence the company on the upcoming Q4 quarterly results. We will do then a chart analysis and then end it with the price prediction. So just leave a comment down below if you own the stock, if you thought about buying it, if you sold it, whatever the case is. I'm always curious and I really do enjoy the comments. So let's go ahead and get started. So for those that don't know anything about GEVO, I just wanted to do a quick little summary on them. So GEVO addresses the market need of reducing greenhouse gas emissions with sustainable alternatives and is commercializing the next generation of biofuels with diesel, gasoline, and jet fuels that have the potential to achieve zero carbon emissions. Now, GEVO uses low carbon renewable resources based carbohydrates as raw materials and is developing renewable electricity and renewable natural gas for use in production processes, resulting in low carbon fuels with substantially reduced carbon intensity. So they say their product performs just as well or better than traditional fossil-based fuels in infrastructure and engines, but this substantially reduces greenhouse gas emissions. Okay, so that's key right there. Okay, now in addition to addressing the problems of fuels, GEVO's technology also enables certain plastics such as polyester to be made with more sustainable ingredients. So that's a quick little summary about them. Now let's go and try to figure out what the factors are most likely for this Q4 results. According to the analysts, the market expects GEVO to deliver a year-over-year increase in earnings on low revenues when it reports results for the quarter ended December 2020. This widely known consensus outlook is important in assessing the company's earning picture, but a powerful factor that might influence its near-term stock price is how the actual results compare to these estimates. So you got to compare the actual results to what they thought the estimates were going to be, right? So with the earning report, which is expected to be released on March 17, 2021, for those that didn't know, that might help the stock move higher if these key numbers are better than expected. So that's what we're hoping, right? When you have skin in the game, this is what you want to know, right? So while management's discussion of business conditions on the earning call will mostly determine the sustainability of the immediate price change and future earning expectations, it's worth having an outer inside look of the odds of the positive EPS surprise. So for GEVO, the most accurate estimate is higher than what the analyst is suggesting. So that the analysts in general have recently become bullish on the company's earning prospects. This has resulted in earnings of an ESP of 25%. So while calculating estimates for a company's future earnings, analysts have often considered to what extent has been able to match past consensus estimates. So it's worth taking a look at the surprise history for gauging its influence on upcoming numbers. So for the last reported quarter, it was expected GEVO Inc. would post a loss of 0.9 cents per share when it actually produced a loss of 0.08 cents, delivering a surprise of 11.11%. So over the last 4 quarters, the company has beaten consensus estimates just once. Now, bottom line, an earning beat or miss may not be the sole basis for stocks moving higher or lower. Many stocks end up losing ground despite an earnings beat due to the other factors that disappoint investors. Similarly, unforeseen catalysts help a number of stocks gain despite an earnings miss. So this is according to this analysis individual, and so I wanted to point these things out for you. Factors to consider: COVID-19 impacts and unfavorably commodity environment. GEVO terminated its production of ethanol and distillers grains in March 2020 at the Louvain facility, which has been hurting its top-line performance since then. The company also suspended ethanol production at its Louvain facility. We expect its fourth quarter sales to have also suffered due to the absence of these product lines. Okay, so that's another reason and something you want to think about. Okay, guys, just keep these things in mind. What I wanted to do is remind you of some of the old news that's going to help us with those earnings, right? So remember in February 22nd, you had SAS, the Scandinavian airline system, signed an amendment to increase SAS minimum purchase obligation to purchase sustainable aviation fuel, or SAF, to 5 million gallons per year. So GEVO and SAS signed the original fuel sales agreement in October 2019. So with this finalization, this amendment of the fuel sale agreement, GEVO expects to supply SAS with SAF beginning in 2024 from GEVO's Net Zero 2 project for use and distribution in low carbon fuel regions in the United States. The value of the fuel sales agreement, as amended, is estimated at over $100 million over the entire term of the agreement, inclusive of the related SAF and environmental credits, right? So SAS has an ambitious goal in reducing its absolute climate affecting emissions by 25% from 2005 levels by 2025. This increases GEVO's SAF will help us to reach at least 20% of the SAF needed to reach our emission reduction goal. So the reason why I bring this up is to remember some of that history news, right? You need to keep in mind, just in case, some of those thoughts on the reason why you bought into this stock, right? So we're going to take a look at this chart here in a second, but things to me are looking good. All these things are good reminders, and I think just like this is a good example that's going to show you that the earnings are going to be good. And so I want to keep that in mind. Okay, so here's my thought process. Just here recently, one of the stocks that I also watch is called ChargePoint. It's a charging station for all electrical vehicles. They're a pretty big company. They just here recently just let us know what their earnings were the past couple days, and prior to, the stock was just continuing to grow. The following day, it dropped 13%. And so I want to keep that in mind when you're thinking about the stock, if you're trying to buy it, if you're trying to sell it, if you're trying to average down, right? So just keep that in mind, because I've seen it time and time again, is when they send this news that everyone knows that it's coming out and it's not a surprise, people are using those options and those calls and those puts to manipulate that stock itself, right? But here's the good thing. Currently, at their close, it's 4.66%. That's exactly what I want to see, right? So we'll probably see that it will continue to go up, especially now that the market itself has situated itself out. Now we can kind of take a step back and look. And so as you can see, the 52-week high was $15.57. Currently, it's at $10.10. So up to the 17th, you might continue to see that trend line continue to grow. So again, keep that in mind. And it's all dependent on what you're trying to do, okay? I'm not a financial advisor, but this is what I see on a day-to-day basis when I'm looking at these stocks, right? So again, keep in mind that this is a really good company and it has good fundamentals, right? It has a good foundation. I like what they do and I like the technology that they have. So just keep in mind, so if you're trying to do short-term or long-term, that's going to base some of your decisions, because I have a feeling, like I said, the day before, the day of, and the day after, that's going to be the most crucial. But I think the earnings are going to come out a lot better than what we expected. So anyways, guys, I really do appreciate you taking time to listen to this video. I really enjoyed talking about these stocks, especially the ones that I've been talking about here lately. So if you really enjoyed it, again, just let me know and leave a comment. And as always, welcome to the Ticker Feed family.